Okay, we are live, and I've got Sam Halpin, and today's topic will be money matters, practical tips for financial.
Very exciting.
Okay, so that was Instagram with a little bit of a lag, guys. So thank you for understanding. I don't know if Sam, you could hear it, but that means Instagram is working, which is great
Fab.
news. Right. So with this hiccup starting, and while we're waiting for people to join us, I will do the boring bit, which is talk a little bit about eudaimonia. So bear with me. So I am Christina Garidi, and I have founded Eudaimonia Coaching UK on a mission to propel people to live authentically. So I coach ambitious professionals and entrepreneurs to decode their purpose and find career alignment. I introduced the Eudaimonia success model in 2018 globally on a TEDx talk, and I am the host of Eudaimonia Live Show, which is where we are today, where I showcase brilliant people who sprinkle a little eudaimonia into our lives every day through what they do. And eudaimonia, for those of you who don't know what it means, it's an ancient Greek word, but also a paradigm for well being. And it means, in open translation, human flourishing. Literally, this concept has been forgotten for over 2 millennia and only mentioned in philosophy courses. Whoever knows Aristotle, Immanuel Kant, they would have come across the term. But this needs to change. Hence, I'm here, and my clients who have chosen to self actualize on their path, they're making a leap daily to realize their full potential and lead their lives authentically in the here and now. And you may wonder, why am I monologuing? But who is our guest? So today I have the honor to introduce you to Samantha Halpin, who is a certified independent financial advisor and also the managing director of Halpin Wealth Management, a female led financial advisory firm based in Cork, Ireland. So, hello, Ireland.
Hello.
With years of experience in the financial industry, Sam is dedicated to simplifying financial concepts and helping individuals and families build financial confidence. And I am so happy, really, to have Sam here because she's passionate to empower people to take control of their finances. And really, Sam is here because she believes that everyone can make their money work for them and, start out in planning their future. So there's planning, experience, but also advice that Sam can bring us. So I think she's the right person for you to be asking all your burning money questions here live, or keep her as a contact and make sure you connect with her so that, if it's something more personal and more private you want to ask about, she will be able to give you advice towards the right direction. Of course, countries may be different, so be aware that at this point in time, we are not offering specific private financial advice. We're going to talk about general terms. But, if you want private and financial advice, Sam is a excellent starting point that I wholeheartedly recommend. So I'm going to get a little bit started with whoever is live with us. If you do, believe that money matters on our life, on this planet Earth, in this time and age, then give us a little bit of a hi, or say hello or like our live right now so that we know you're here with us. And to set the scene, I was sharing with Sam earlier a couple of statistics, at least in the UK. I'm based in the UK, so I could access those now. But there was a beautiful article, probably a scary article, if I'm honest, that talks about the UK financial capability. What does that mean? I'll give you like three top headlines. 39% of adults, that's about 20 million UK population, don't feel confident managing their money. And that's 39%, right? And 11 million have less than £100 in savings. It's quite shocking. And 9 million of us in the UK are in serious debt, meaning that they can't really know how to pay it back. And only around a third of them are actually getting help or access to help. So, reading, I was doing a little bit of headline reading this morning, and I was like, oh my God, I'm so happy we're doing this live, because, it's so striking when we read these statistics. And obviously, I'm sure Sam has a little bit of commentary on that, even though she's based in Ireland. So perhaps you can get us started with a little bit of what you think of these stats and whether they're quite reflective. And of course, we're going to go into our normal interview.
Yeah, so the stats can actually be very overwhelming and very scary and very kind of daunting. And I try to stay away from those, because you then see yourself as a statistic and you're like, how likely am I to get out of it if there's, 20 million other people like this, like me? But a lot of finance is just getting financial literacy, like understanding what you're doing with your money. As I said to you in my bio, everyone can make their money work from them, no matter how much money you're on. If you're on the minimum wage, if you're on hundreds of thousands of euro, if you're a multimillionaire, it's what you do with the money at the end of the day. It's how you use it and benefit for yourself. So the stats are great. They show us that there's obviously a gap there, that people aren't looking for help. They're not asking for help. They're too scared. We live in a society where people tend to put their head in the sand rather than seeing their circumstances and how to better it. There's kind of like a scaremongering about it. They'd rather just not know. So that's where we come into it. I'm a qualified financial advisor, and there I sit down with you and we basically see where you're at, see where you'd like to go, and we bridge the gap. That's basically all we do. We tell you how to get from A to B. You can do it and you can get to B, or you can do half of it, you can come back, and it's all just about reevaluating yearly. This isn't going to fix it. Nothing is you come in and all of a sudden all your problems are gone, but you have a plan to work on and you know where you're going. And that's the whole point of getting a financial advisor and getting financially literate, because I'm in this 15 years now and I'm still learning new things. I'm still finding little loopholes that you can do to get yourself a bit more extra money. I'm still finding ways of different clients coming in and figuring out how they can do it the best. So I'm 15 years and I'm still learning, you still have more to learn.
Absolutely. And who better to go to, than someone who has access to all the products out there in the market, but also all the regulation, right? Because that's what Sam means when she says she's a qualified independent financial advisor, probably by the Central Bank of Ireland, right? Here in the UK, we have the Financial Conduct Authority. So definitely, if you are worried or if you're not sure you understand all of it, and instead of basically just putting your head in the sand, ask for advice, because people like Sam, they deal with financial problems of their clients every day, and who better to actually get support from? And we're going to go into the types of support perhaps in a few seconds. But before we go deeply, and I think we already dived a little bit deep into the money conversation, which I wanted to have with you today. As we start in 2025, a lot of people want to start their year right, and therefore, they look for these, talks. And we had quite a lot of encouragement as people were joining us on our show. But before we go there, I actually know Sam from a different point of view, from my coaching business. And, we met, probably a year and a half ago through a common loving contact that we both love. So I know Sam is actually not just an independent financial advisor running a successful business, but I actually know her from her creative side and as a person. And I wanted you, Sam, to tell us a little bit more about your journey and how you evolved, because you didn't get born one day and said, yeah, I'm going to be a financial advisor. That's it. Right? So how did your journey evolve?
So I kind of stumbled into banking after college. I just applied for a million jobs and banking was one of them that got back to me. I did the interview and I kind of got the role, and I just stumbled into it. I never thought of myself as someone who wanted to work in a bank, but when I started it, I loved it. I worked in a few different banks. I've worked in a few different institutions, and I loved helping people, because people don't know a lot about their money. And if you can give them one tip to be able to help them a little bit more, it makes the world of difference. And being able to help them around difficult times of bereavement and stuff like that. Money is such a big issue around those times that it's absolutely amazing that I could give them the knowledge that I had. So I did my exams and I tried going up the ladder, and then from each place I went up a small bit, but there's a lot of restrictions and there's a lot of women don't get a lot of promotions and this kind of stuff that went on. And it was during COVID that I was being forced to take promotion that technically wasn't a promotion, but I was being changed jobs and I didn't want it. And my husband, who's an entrepreneur, and he's always had his own business, he took over for the family business, was kind of like, look, let's just sit down and think, what do you want? And as a dream from a child, I always wanted to be a business owner. I didn't know what business it was, but I wanted to be an entrepreneur. I wanted to own something. I wanted to be my own boss. So we sat down, and this is what I do now with pretty much everyone who I see, and they're like, oh, I'm stuck in the corporation, I can't leave, I'm in the cycle. You can. So we sat down, we saw what the money we were getting in, what money we had in savings, the monies that were outgoing, and we literally wrote a budget of what we could cut off our outgoings, how long we could survive on one salary, and could I quit my job. So without thinking too much about it, we had done the budget, we worked out the maths, and I said, look, I'll do it. And my husband was full on for it. He said, if you're not happy, I'm not happy. So thankfully I had a supportive husband, and I quit. I had no idea what I was doing, but I took the time myself to sit down and really decide what I wanted to do, because I don't think a lot of people do that. They jump from job to job because of they're scared and they need money. But we had physically worked out that we could last at least 6 months without me earning a single bit of money, with like being tight. So we were like, I've got 6 months to figure it out. So first month I took off, did nothing. I think I was just decompressing from a stressful 2 years in a job, and all the years before that as well. And then I set up the Creative Solutions. So it's a marketing company where I design websites. And I was doing that for about a year, and COVID was going on, and my husband was very into finance as well, but he wasn't a qualified financial advisor like me, so he kept coming to me for the regulations, and I missed that side of my job. So then we decided, sure, we'll set up another company. So we sat down, got the budget again, looked at our ins and outs. Could we afford it? Could we afford the risk? And then we decided, yeah, we could. So we set up Halpin Wealth Management. So we now have 3 companies between us, and it's fast and it's a lot. And as well as that, we have the family. So we are married now. We have a child, Hugo. He is 2. This is the #1 business in our household. We mind each other before we mind the businesses. Yeah, there's 4 businesses. But I wouldn't change it. Like, people always say to me, why, you've one business, why do you need more? Because there's risks with every job you have. One income is stressful to me because you're reliant on that one income stream. We've split it now where we have 3 income streams. So if one business is going through a lag, or we're missing staff, or we can't pay something, we have 2 other businesses to lean on. When one business is super fast and busy, the other tends to lag. So we got businesses that they weren't in the same industries, so that they balance each other out. And then when I'm super stressed, I got Christina to help me with my life coaching, to be able to prioritize my life. I was able to stand back and decide what parts of the business I wanted, and everything else we outsourced. We got staff, we got contractors. We just didn't do some things because they weren't necessary, and we were just doing them because society told you had to do these things, obviously compliance and social media and everything like that. But I do the parts that I want, and then I'm outsourcing, and we're balancing the family and the work and keeping the businesses profitable.
Beautiful. And it took a lot of courage, but you've done it all, like a boss, may I say.
But again, it doesn't just, it's good now. We're like, it's every 3-4 months we sit down and we have to reevaluate, and that's what we're willing to do.
And what I hear from you as you're sharing all of this, because all of the businesses, by the way, are thriving. And I know that because we have those regular conversations. And, what I hear is that you actually did solve your own problem, and you did actually apply what you would advise anybody else to yourself first, and you realized it works, and you realized, of course, you were qualified, and therefore you realized that there's a business income stream. But I also loved what you started talking about, which was a myth that you debunked for yourself first, but also you're really applying in your life today, which is, there's not just one income. We don't need to work hard just in one place, because that one place, no matter how hard we work, no matter how good we are in it, we looked at COVID, how many businesses went out of business overnight, especially hospitality, right? It was knocked to its knees. And, it didn't mean that people didn't do great or they didn't work hard. They just couldn't operate.
Well, they say that a millionaire has at least 7 streams of income. So so that might not be 7 businesses, but they could be investments and savings and work and passive income. So like most people in our society look as the job, their income, what salary they're on, and that's it's a lot of pressure to put on yourself. Like,
exactly,
you're not secure just because you have a paycheck.
No. Thank you, and we'll come into a little bit of that, in the next question. But before we go there, actually, why not? Because thank you. Actually, let's go into that. I remember, obviously, social media. I follow Sam. She had a beautiful TikTok video that said all the wrong things to not do, basically, regarding financial wellness. And there you tackled a few generational myths that need to be debunked, right? And you started already talking about it, like the one salary that's secure. Actually, a millionaire may have, 7 different streams of income. So what if you could explain a little bit about how you see financial freedom? Like, what's your kind of philosophy, and what are some of the common myths? 2 questions, right? What's your philosophy about financial freedom, and some of the common myths that you observe your clients having when they come to you, and how you shift those beliefs in order to be able to enable them to be well financially?
But the definition of financial freedom to everyone is completely different. The definition of rich and wealthy is very different to 2 different people. To 100 different people, it does not mean the same thing. Most people, when they think of rich, they think of you've got a huge car, you've got a big house, you've lots of money in the bank. But it's being financially free is not being stuck to your salary, not being going paycheck to paycheck, literally having more coming in than you have going out, and not being afraid of the extra bill coming in, or being able to afford your holiday. That's financial freedom. You don't have to be on hundreds of thousands of euro. You just have to live within your means and be able to go with the ups and downs, because there'll always be ebb and flows. There'll always be something that comes up. So we have foundations in Halpin Wealth Management that we always talk about, and having more. So one thing that most people don't do is they don't have a budget. Most people say they have a budget, but it's normally to save for a holiday, to save for Christmas, to save for the new car. They don't actually have a budget of how much is coming in, how much is going out, and how much they're saving for their future. The next thing, so people they're not aware. And if you're not aware, how can you plan? The next thing that people don't have is they don't have an emergency fund. And this is something that people are like, how can you go out on your own, and how can you do this? And I'm like, well, if you have an emergency plan or emergency fund, you've 3 months to figure it out. And in 3 months, I could get a job. Like, people are like, oh, you'll never find a job. If you're willing to work, you will find a job. Like, it may not be the perfect job, but you will make money. Like, you're not going to be unemployable. I may not get the exact perfect position in the business that I want, but there's definitely, like, people are begging out for people. Like, genuinely, I can't hire staff. So that's what people are always scared to me. They always say, but what if? And I'm like, then you put things in place like your emergency fund, which should be 3 to 6 months of savings, that if you lost your job, if you broke your leg and you couldn't work, if your business went bankrupt, you have money to live.
Yeah.
But you can't figure out the price of the emergency fund if you don't know your budget in and out. So that's where it all begins. You need to know how much, like, people put a lot of worth on how much they make. People are like, oh, I make 70K a year, or, do you know this? And they put a worth on it. But nobody,
it's not
genuinely, people get so excited, but then I'm like, but how much are you spending? Because somebody could be earning 70K a year and spending 80, and someone could be earning 20,000 a year and saving 5, and they're in the better financial position. Do you know, people don't see it that way. Then people aren't making goals. So there's many different types of goals. You've got short, medium, and long term. Short is the holiday, the Christmas, the car. Medium is kind of your children, your their college funds, bigger house, the bigger things, and then long term is your retirement, because people work 40 hours a week. They work 50 something weeks a year. They work 60 years of their life. Do you know, most people are getting part-time jobs when they're nearly like 12, 13, 14 now. You're working till you're 66 if you're lucky. Most people are working on further than that now, and people aren't putting in provisions for their retirement.
And a lot of people are forced to work in later age as well, right? And
they have to, yeah, because
yeah.
they haven't put the provisions in place, and people then are pushing them out of companies because they're getting older, and you're in a very awkward position then because you need the money, but you didn't prepare for yourself. So like pensions or retirement, when I talk about it, people are like, oh, I don't want to talk about that. I'm only 40, I'm only 30. But the younger you talk about it, the more you understand and the more you can plan for it. Like, if I could retire at 50, I would. Do you know, if I had the money, but like people don't think about the retirement. You would say you retire at 66. Most people are living till they're at least 90. That's 24 years you have to fund before you retire. 24 years. Like, think of how much you spend in a year. And people are like, oh, I'll figure that later on. And like in Ireland, we have the state pension. It doesn't cover. It's €14,000 a year. Like that covers nothing. So like people really need, like I know you have auto enrollment in England, which is great, but it's still not enough. So people really need to be planning this when they're in their 30s and their 40s and putting the money aside so that they can have the really good retirement that they deserve. They've worked long enough that they can still go on holidays. They can go to the cinema. They can get the takeaway without worrying if the electricity will go on.
Exactly. And we cannot predict what private medical healthcare we might need, right? Because the health systems are failing across the world. It's not just the UK or Ireland, and we cannot guarantee some things, we might be in the queue for too long. So the good stuff and the bad stuff we need to plan for. Thank you for giving us the fundamentals in terms of, we need to have a budget, we need to have a plan, we need to have the goals in place and plan for them, and also make sure that we have that pension conversation quite early on in life.
And sorry, I forgot one part is debt management, just because people get out debt and then they don't look at it anymore, but you can manage your debt once you take it out. So it's another thing that you should it's a foundation before you should do everything else.
Mm-hmm. This is beautiful advice. Thank you so much. Right. So I know, for sure, being a coach and being, a purpose coach on this matter, in the last 10 years that Eudaimonia has been in the market, that, most people wouldn't pursue their real passions or the real career that they're here to do. We know it, we talk about it, and there's always that question that comes up, Christina, I can't just quit, can I? And I wish I had your knowledge and I could just put it in the plan. So now I know I can just say, speak to Sam, right? But actually, there's a real agony for all of my clients, especially when they realize that their career and their purpose are a bit further apart than what they hoped for it to be. They stick to jobs for financial security purposes, and I don't blame them. But also, some of them actually hate their job. And I'm saying this because it damages their health. They end up with psychosomatic symptoms and so on. And of course, they do that because it pays. And really, my question to you is, if someone wants to start today on their first steps towards financial freedom, what would your advice be to help them frame their onward journey? So you already given us the pillars, the 4 pillars of what they need to put in place. But like, if you got somebody who's like, my career there, and I need to figure out roughly what I need to do, what would you kind of say the first things are to support them on this journey? Because anyone can make it happen. It's just they need to put a plan in place, right? And the plan will look different, I'm suspecting, for each person.
Yeah, well, I think firstly themselves, as I said again, figuring out their ins and their outs, the budget, like having a snapshot of your finances, because it's not just what's in and out. It's also your savings, it's also your investments, it's also your debt. You need to have a snapshot of the entire thing. Then you need to kind of, as you said, have your goals of where you want to go, your purpose. And then you need to seek help. So you need to go to a financial advisor. You need to talk to somebody, a third party who's not you or your husband or your friends, and they think outside of the box, and they may say, look, this isn't, you can't afford it. It's something you can do in a year or two. It could be, look, why don't you do a course outside of this so that you can upskill so you can go for the bigger job? Or it may be just, yeah, you have the finances, quit, and they'll give you the steps then to start looking for the next job. So I think seeking advice is something that most people don't do. Like I say to you, why don't you come into me? And they're like, oh, I'm not rich enough to come into you. And what I always say to somebody is, you wouldn't go to a fitness instructor and to say, oh, I'm not fat enough, I'll wait till I get a bit fatter. Or, I'm too skinny, I can't go to you. But like, regardless of where you are, if you have a lot of money or you don't, either way we can make it better. So like, I've never heard a person say I can't go to a fitness instructor because I'm too fat or I'm too skinny. Like people, you'd be like, what? You're going for help. They'll help you wherever you are. But for some reason with financial advice, people are like, I must be making a lot of money. I must be on a pay slip that's like making thousands of euro. And I say, if you have a pay slip, we can help you.
Thank you so much for this, because that kind of comes together with what your philosophy about financial freedom, right? And I think your major belief and fundamental belief, and you had that since I first met you, was anyone should seek financial advice. And of course, your firm specifically makes sure it's affordable financial advice. It's actually meeting people where they need to be, rather than you need to be rich. There is a gap in between, the people who can get financial advice, which are the richer people, as opposed to working class or middle class people like me, for example. So I love that, and thank you for mentioning with the analogy of am I fat enough or skinny enough, depending on when I need to seek for personal.
But it's the same thing, because like financial well-being, mental health well-being, physical well-being, they're all the same. People look for help with fitness, have always done. They're now looking for help mentally, like with you as life coach. But for some reason with finances, and even though money rules the world and we all go out and work every single day, we're all trying to earn a pay slip, people aren't trying to figure out how to work their money the best. It's kind of head in sand, as I said earlier, just hide.
Yeah. And I find that fascinating as well, because especially as you said, we work every day for money, we worry about money, we talk about money. I come from Greece personally, and people still to this day in cafeterias talk about tax, talk about how much money they've got, and so on. And it's their conversations are constantly about money and how much they don't have. But none of these people, interestingly, seek financial advice. So thank you for mentioning that. It's so obvious, but it's more accessible than we think, and this is the exact mission of helping wealth management. So my next question to you is, if you could simplify like the levers that impact one's financial health, and we talked about a few, but the way you see it as an IFA as well, right? IFA meaning independent financial advisor. What would you say the ABC of financial wellness is for the people who are hearing us right now? So somebody's in corporate, let's say they're working and they're healthy, they have a debt, they have perhaps a mortgage, they have, a couple of things are the healthy things to do for an adult, like get a house, get a car, get a perhaps leased car, have a corporate job. I'm putting some money around my pension. I'm managing my tax. I've got a salary. Perhaps I have a house. I'm renting it out. I don't know where people are, but what would you say, like the typical ABC for financial wellness would be? Where would people could start looking in the short or the maybe medium term to start improving things? What could they kind of aim for? Maybe might be a better question.
I thought about this and I could have gone there's loads of different ways I could have gone down. There's loads of metrics of kind of about inflation and compound interest and different rules that you can do. But I wanted to make it as literally simple as I could, because I feel like people don't have the basics, they don't have the foundations. And if you don't have them, why would you be doing all the rest of the stuff? So I did an ABC: accountability, balance, and consistency, right? So accountability is super easy. You need to know what you're getting in, what you're getting out, what you're doing with your money. I know it seems like such a small thing, but no one does it, like genuine, and you have to do it on a monthly, quarterly, yearly basis. You need to be sat down with your husband and seeing what you're spending your money on, what services you have, what you're putting into your savings, what you're putting into your investment. You need to be, every time you get a salary increase, you need to be increasing those. There's a ratio of 50, 30, 20. So 50 should be going on your needs, 30 on kind of like your fun money, your needs, and 20 should be going in savings and your future. So that every time you get a bump in pay, you should be dividing it out equally. So just being accountable and knowing what's going on. Balance is saving for the future, saving for your pension, saving for all of those things, but enjoying life now, because you don't know if you'll ever get there. So like, people have goals and money and they're like, I want to save 500 grand for a house, and that's all they concentrate on. But you need to balance it, because you won't be able to sustain that. So you should always have mortgage money, you should always have this money, but it should be balanced out. There should always be fun money. And the way we always say is, you should always take your savings out first, so pay yourself first, then you take out the mortgage and the electricity and the needs, and what's left over should be your fun money. So depending on your budget, which you should know because you're accountable, you should be able to do this. And then your fun money you can spend on whatever you want. If you want to go out and have a few pints, do that. If you want to go to the cinema, if you want to buy yourself a new handbag that costs a lot, and you've paid everything off and you've done your savings and your investments, go for it. It's your money. You work hard enough. And then C is consistency. This will be, money matters and money rules the world. And if you don't do this consistently for your whole life, you can't save for 6 months and it's done. This is something that you're going to have to budget and look over, plan your goals. Once you've got a goal, do it again, meet a financial advisor, have a yearly meeting with them, and life changes. You'll get married, you'll buy the house, you'll have the kids, there'll be job increases, there'll be different things that happen through all the different life stages. Then you'll be coming up to retirement and you want to pump your pension. But if you start early, great. If you don't, start now and then be consistent. So ABC, accountability, balance, and consistent. I know they're basics, but people don't get them right.
And if you do the basics, actually, and I know that because it took me a while, up until 28 years old, I didn't know any of this. And I wish I had met you then, because ABC would have been something I could remember and actually implemented. And I'm so glad I asked this question. I didn't even intend to, but Sam has just got back with an absolute beautiful acronym of the ABC of financial advice, guys. You know, heard it here first. Really beautiful. And I loved what you said about the accountability aspect of really half of it, 50% should be on our needs. And I've seen so many friends, but also people I know, that they spend so much of their salary onto their rent, and then they've got hardly anything. I've been there, by the way, when I was 24. I remember I was living in London Bridge, spending probably 80% of my salary on a rent. And bills.
That's
and
living within your means, because like, you have your salary, so you have to be able to budget. So people get these big houses. If you have a big house, you need a big job. So you either get a bigger salary or you get a smaller house. You can't do both.
Yeah. And no, I've made those mistakes myself because I didn't know how to budget. I didn't know how to, accommodate my needs and how to save and so on. And I remember in my early, late 20s and early 30s, I really found myself in a financial situation that was not good to be in, and that caused so much stress and anxiety, for sure. So I wish I knew that ABC, and I'm so glad you shared it here with us today. And I want to invite our audience, whoever is watching us right now, if you've got any financial questions or any kind of perhaps myths that you are starting to suspect after what you heard so far from Sam may not be true, ask away. Do send us your questions, or do ask us anything that has popped to mind in the chat, and we will pick it up as we go along. But as you're doing that, I'm going to just share something I found on Financial Times this morning as I was doing my research for our call today with Sam. And it was rather depressing that I had to actually send it to Sam and say, oh my God, look at this. So I'm going to be a little bit boring and read it, but it's actually quite important. And it's called, the article is called The Advice Map of Britain. obviously, I'm in Britain and I'm interested in this. So it says the analysis of Advice Map of Britain from Financial Times, it's an article on Financial Times, revealed persistent disparities in access to financial advice. Key factors impacting an individual's likelihood to seek financial advice include gender, age, relationship status, and geographical location. Simply being a man makes it more likely that you seek for financial advice. Half of advised clients, they had a study there, were male, and 2/5, that's only 43%, were female. Northern Ireland specifically has the widest gender advice gap, it says, while London boasts the narrowest gap. And I wonder why. And I'm just sharing those things to see what Sam also knows empirically from the clients she deals with, hundreds of clients that she deals with on a day-to-day basis. Now, it says the gender pay gap, resulting in women having less spare money to put away for their future, is likely to be a factor in fewer people taking advice. Also, it says risk aversion could also play a part. And HM Revenue and Customs, HMRC, our tax office, ISA subscription figures show that women who do have money are more likely to save than invest, which is quite scary news for me, at least, reading it. By investing less, many women have less opportunity to grow their money, compounding wealth inequalities. So bringing more women into advice is crucial to the long-term financial security. So based on that, I mean, I can tell that financial advice and planning seems to be a boy club, like a man's world, as you were saying, Sam, before. So if you have a message, what would that message be to women about financial health and accessing advice? And I almost know what you'll say, but please do say it again.
So, like, this is just stats in the UK. Ireland is the exact same. Pretty much every country in the world is the exact same. Men, the pay gap is higher, the savings gap is higher, the pension gap is higher. Men just seem to be more risk averse. It's a cultural thing. I think women are kind of discouraged from taking risks because they're a woman, because they're the mother, because they're supposed to be the safety net. I think it's a cultural thing around women. But there's a lot of reasons why women are on less pay. I know that the government in every different country are trying to fix it. It's to do with the woman generally is the caregiver, and they're taking career breaks and they're on maternity, and there's not as much progression because of this, the managerial, because they don't want women to have kids and to be leaving. Like, it's a whole thing. But from this, men earn a lot more money, and because of this, they have extra money to save and invest. So when a woman has extra money, they're scared because they've had a career break for 3 or 4 years because they've been minding the children. If the child is sick, they're the ones that are taking their annual leave days to stay at home with the kid. They don't have as much leeway as men. So when they have their savings, they're putting them in the bank and they're losing money on them. So, like, they're scared for risk. So investment is seen as a risky thing to do. But I always say to people, putting money in the bank is also as risky. We've seen how many banks have gone bankrupt in the last, 20 years. So they only guarantee up to 100 grand. And I know that may seem like a lot of money, but any penny after that 100 grand that you have in that bank account is not, well, this is in Ireland, it's guaranteed up to 100 grand.
In other countries as well.
Yeah, and there's banks that have closed down and you've got none of your money back. There was no guarantee. In Ireland, thankfully, we are guaranteed up to 100 grand. But like, then there's inflation, and inflation at the moment is about 5%. So if your money's in there at 10 grand, what it was worth 4 years ago is worth a lot less than it is now. So the whole point of investments is that you're beating inflation and that you're making a bit of return on your money. And I know it seems risky, and a lot of people have lost a lot of money on it, but they've also lost money in the banks. Everywhere you have money is risky. You just have to decide what risk you're willing to take. It's the same with women saying, I can't work for myself, it's too risky, I need a salary. That company could also go bust tomorrow. They could also make you redundant tomorrow. They could also, just fire you. So whatever you're doing is a risk. Society has just told us that working for someone else is less risky. Society tells us that having a bank account is less risky than an investment. There is still risk. You just need to figure out what risk works with your family, with you, with your lifestyle. And that's where a financial advisor comes into it. We do a risk questionnaire. We go through it with you. We do the snapshot of where you are. And then if you come up with a risk level, say 2, and we're like, look, we advise you to go higher because, and then we'll explain it to you. And then you can decide if where you invest the money, if it is sustainable. You can make it eco. You can invest in companies that you love, that you have a purpose for. You can decide that you want to put it into different countries, into different companies. That's what the financial advisor is there to do. If you put all of your nest eggs in one, yes, it may go corrupt or not corrupt. It may go bankrupt and you may lose all your money. But if you have a good financial advisor, they're not going to do that. They're going to make sure that you have a nest egg in different places. And then with investments, it's all riding the market. So yes, we may have a boom and then we may have like the tail to tiger and then we may go into recession. But if you've done all the foundations and you have the emergency fund and all of that in the place, and your investments and saving were from the 20%, you don't need that money. So you should be able to ride out the market. It's where people miss the foundations and they go straight into the investing that they miss the piece where they're not protected. And then when they lose all their money, they are bankrupt. So, and I think men, when I tell them this, they take it on board and they go forth and they do it. When I tell women it, for some reason, they come in 2 or 3 or 4 times. We find it harder to take advice from people or to action it. And it's just, again, it's a confidence. And women tend to go home to their husbands to relay the information to make sure that it's okay. And it's a society. So like me, I'm breaking barriers. I make decisions on my own. My husband is my partner and we work off each other, but we don't have enough time to relay everything back and forth. And I think there's more and more women like that are taking a stand, and they're working as a partnership rather than the man being in charge and the woman being the secondary. They're now making 50-50 decisions, and men are willing to let women take charge with money, you know, if a woman is happy to. So I think that women should be becoming financially literate. There's books out there where you can teach yourself, if you're too scared to go into a financial advisor, that you can sit down and get the basics, and then when you're a bit more confident, you can go into a financial advisor. But it's then taking the advice and actioning it and doing it, and not just standing back and letting, you know, because that's where it happens. Women tend to not ask for pay rises. They tend to not ask for promotions when they are due them, whereas men, when they're not due them, have no problem asking for the pay rise and demanding. It's just the way society is, and what we're doing is we're breaking it. We're breaking the barriers and boundaries, and, you know, we can do it. We can do it all.
Yes. And you're a living example of this. And, you know, I really wanted Sam on this live show simply because it's a female-led business, but also that doesn't mean like all the boys and, you know, in the company are very much well equipped, you know, to make the same financial decisions. It's just, you know, that seeing Sam so empowered, but also empowering other women to make the right choices, but also put the fundamentals in place, the ABC that she mentioned before. And actually, you know, when you put all of these numbers down, then you can see whether you've got, once you've covered your emergency fund, you've covered your needs, you covered your fun pot, and you covered, you know, all your giving perhaps that you need to do, supporting another member of family or whatever. Then if you've got money remaining, then there is a pot that you can invest. And from my personal, at least, experience with the independent financial advice in the UK, is that a financial advisor would take you through the process of understanding your risk profile, and there's different market products out there to meet that specific financial risk profile. So, you know, sometimes you may have bigger goals that you need to achieve, and therefore a financial advisor can support you in taking the right steps in order to get there. But most of the times, you know, it's about following that advice. It's about making sure that, you know, you are meeting those budgets and you're meeting those needs. And then after that, you know, the investment pot that you have can be invested. And particularly, you know, I'm very, very much interested because coming from a country that recently, recently, it's many years now, has collapsed financially, I know that, you know, my parents at least done all the right things but they ended up with no pension. Well, very minimal pension, and they have invested as well, but the market wasn't necessarily, because they didn't know how to invest. And what they were missing in all of this financial trauma that our family went through was solid, sound, local, relevant financial advice, independent financial advice that doesn't come from the uncle, from the auntie, from the neighbor, from
TikTok.
right? This is not solid financial advice. This is not validated, verified, certified, and qualified independent financial advice.
Yeah,
And
and I think one thing that most people do is they get a tip or they hear financial advice that someone else got, but it's not one fits all. It's very different for every single, even if you have the same job, salary, everything, your family circumstances are different, your age, everything comes into it. So I think just because one person got one piece of advice doesn't mean that it will also, and a lot of people, instead of going for financial advisors, they'll just get tips that someone else got. And I just think it's very important that they're individualized, and it's not for everyone. Do you know, as in like one tip won't work for everyone.
exactly. And I know so many people, right? And we talked about it. I have invested in ISA. I have hardly made any money. I know a couple of other friends who didn't also make money in their ISA. That doesn't mean I should stop investing in an ISA. Like the first thing that my advisor said was stick it into the ISA. Right? And I was like, you just have to let it there now. It may go down, it may go up, but it's a snapshot, isn't it? And you just have to have the good habits. So I'm always diversified. And there's a couple of other things that we did, a few more risky stuff that we didn't in the end get the returns. So I just wanted to also share that I have lost money, yes, in investing, but I have also in the long run, in the long run, I'm actually making money. I'm beating inflation. I'm making sure, my money is compounded. And, recently I found out that my pension fund was underfunded. So I'm making, steps in order to make sure that I'm increasing my contribution to my pension fund as well. But, until I consolidated, which is not necessarily always a good advice, but until I consolidated all my pensions, I didn't know I was underfunded. Right.
Yeah.
So little things like that, but that doesn't mean my advice is relevant for Sam or somebody else. It's a tip, as Sam says, but not necessarily, a fit-all advice. Wow, how wonderful. Do we have any questions from the audience about anything that we have discussed so far, or maybe perhaps something more specific? We've got one question, which is in Greek, from Avyi. Hello, Avyi. She says, and now I want to test Sam and her Greek. He says, I didn't catch the ABC. What is it? So if you don't mind summarizing once more, to say what your ABC of financial wellness is, the way you launched it for us today.
Okay, so the ABCs of basics of financials are accountability, balance, and consistency.
Brilliant. And we can always rewind, and we will make a little, probably summary of what she shared previously. And I will send that through to you, Avyi, for sure. That was definitely a highlight of today's conversation. Unless there's any other questions, I will say that I loved so much having you here with us, Sam. Really, you opened up the curtain of, this perhaps scary topic, religion, sex, politics, and money, massive taboo in our times still. A lot more people are opened up now with social media, and they're sharing a lot of things, but I think still, very traditional families wouldn't talk about their salary, especially I find in the UK compared to the Americans. Americans are very happy to talk about money, much more open about it, whereas in Greece would never mention that. In Japan, definitely a no-no. So I remember, in the olden times, your source of financial advice was the bank, which is not necessarily the case. A bank is a commercial institution that sells products, but not necessarily give sound financial advice. Then the next one is definitely your accountant, for sure, or your tax advisor, but actually independent financial advice to look at all of this holistically and include your goals, and, your family's goals as well, is so hugely important. And not enough of us, as we've seen in the stats, is getting access to it. So Sam is definitely dedicated to change that. And I wanted to say that I will share after this session the contact details of Sam in all of the channels that we have broadcasted together. So you will be able to find her contacts and link with her on LinkedIn, ideally, or on Instagram and TikTok. You're most active, is that correct?
Mm-hmm.
Feel free to connect with Sam there and her colleagues. And if you've got any questions, feel free to ask her and get in touch with her. So I would like to thank you once more for joining us today and sharing with us a culmination of years of experience in financial wellness and, of course, being a trusted advisor for so many businesses and families in Ireland who want to improve their financial situation beyond just the security of a salary or a job or thinking it can only be for very rich people. So thank you so, so much for being with us today.
Thank you. Thank you for everyone listening.
Take care and connect with Sam on LinkedIn, TikTok, and Instagram. Take good care. See you soon.
Bye.
Bye.